You guys are alive and blessed. Welcome back to our liquidity concept on our liquidity course. In today's session, we're going to talk about how to trade liquidity on a bear market, guys. Liquidity, guys, like I said in the previous video, is not really a concept. It's just an extra confirmation code. So for you intraday traders, don't really trade the 15-minute time trade. This is specifically for you guys swing traders and you old heads who want to hold a contract for 2 to 3 days, maybe a week, give or take, because it's a gap. So guys, trading liquidity, like I said, is always going to be found on the higher highs, below the lower lows, and below the swing highs and swing lows. Guys, the key to liquidity, guys, is always wait for a breakout structure to happen and a market shift to happen. Either one is fine, because like I said always, price is gonna always retrace. Guys, for you scalpers out there, liquidity is the key, and adding liquidity with market structure and breakout structure is the key dynamic. Why I said that, guys? Because like always, price is gonna always retrace back to a supply zone or demand zone, and at the bottom of a supply zone and at the bottom of a demand zone where we find liquidity. So as you scalper out there, every time price go up to form a higher high, it's gonna come back down. If this price right here was gonna continue to respect this, it would have continued to peak right here. You guys see right here how it didn't break past this previous high. If price was to respect this, and this, matter of fact, it already disrespected it, right? So you guys could have come right here and put your short right above the previous high, and that's where the liquidity sweep will happen. And you guys would have put your, guys, like I always tell you guys, do not be stingy with the stop loss. Extend your stop loss a little bit high, because even though I'm teaching you guys this, liquidity can sometimes kick me out of the trade, because you never know where liquidity is. But it's always going to be above a demand zone on the bottom of supply zone, but at top of a supply zone and bottom of demand zone, and then you guys could take your guys profit there. Even though it's a bull market or a bearish market, you guys could catch either direction of the trade. That's the fun thing about understanding the wisdom, because you guys, even though it's a bearish market, you guys could still catch a call on a bearish market, because like I said, as price make a breakout structure here, it's gonna always retrace. So even though we guys take this put on the 15-minute time frame, you guys could also come on the 15-minute time frame and take a long. Why? Because price retrace at demand zone, and like I said, liquidity will be found on the 15-minute time frame below the demand zone. So you just don't want to jump in. You always want to wait for the pullback, and the pullback never break the previous low, and wait for the market shift to happen. Once the market shift to happen, you guys could either put your long below there, guys. This, you can take so many trades of just one chart. Even though it's a bear market, once you guys have the wisdom, you guys could catch both direction of one trade, guys, of one pattern. And just like that, guys, you guys trade even though this was a pretty much a bear market, you guys still was able to catch a put and was able to catch a call on the 15-minute time frame. But this will only work for you guys who are holding the contract for 2 days or 3 days or 4 days. But if you guys want to be in and out the trade now, matter of fact, take a screenshot of all of these charts that I'm drawing up, because 9 out of 8 times these same charts you guys will see when it's time to trade. And on the 1-minute time frame, it's going to be a more complicated and simplified method, because price is going to always do the same, guys. It's always going to hit a supply zone and a demand zone. As always, prices are always going to be above a swing high. So guys, liquidity, every time you guys understand the market shift and the breakout structure, liquidity is above all of these demand zones, because soon as price make a breakout structure, see how it went back up, guys, this right here. All right, how do you identify a swing high? If this previous high was to do its job and disrespected the supply zone, price will always break past the previous high to an uptrend, and vice versa. See how price break past this previous low? That means to let you guys know price about to shift from a bullish back to a bearish, and you guys want to wait for liquidity to sweep available here, because this right here was the flip switch, right? So when you guys see the price reverse from guys, the breakout, I'm gonna keep telling you guys this in every video I make. The breakout structure is the key. So how price retrace back, guys. You guys, even though it's a bearish or bear market, guys, once you guys understand the liquidity concept, you guys could trade both market. it really wouldn't matter what market you guys are, because a lot of people could only trade a bullish market, or a lot of people could trade a bearish market. But I'm gonna teach you guys how to trade both market, even though the market is on a bearish. Guys, right like that, put your stop loss below there. Above, do not, guys, please do not put your stop loss right where the liquidity. Do not enter the trade here, guys. Never enter the trade when it's already took off. Anyway below, guys, you always want to enter on a supply zone, a demand zone, or order block. Never enter in the middle of the trade. Do not do that, guys, because if you guys do that, your stop loss is going to be way jacked up, and that is not the proper way. I'm teaching you guys to trade. I'm teaching you guys to trade how to get the maturity trade. Don't just jump into no random ass trade because you see price make a long bullish. No, wait. Because if you put your stop loss there, that's where liquidity gets. And you see how price came back here and sweep all of this liquidity here and eventually came back down. So even though you guys want to short this liquidity here, I will advise you guys, put your stop loss above the extreme demand zone, because price is going to always respect the extreme zone. And even though you guys catch one here, a scalper, you could put a next call here, and then eventually you could put a next put there. Guys, it's all over the chart, but you guys must understand, swing highs, liquidity there, market structure lead to liquidity, breakout structure will lead to liquidity. Because you see how price right here was the price went up from a higher high, market shift from to the downtrend. Now we put a put here, market shift again to an uptrend. We could put a call below the previous low, make sure this low didn't break the previous low. You ride a call, then again you ride a put, because like I said, price is going to always retrace after a breakout structure. And as always, stay blessed and mind your business.